Welcome back to my week 4 trading log. So this was a pretty shitty week, honestly. Didn't catch anything good. I saw the good setups were later in the week. There was one good setup that I missed on Monday. Thursday and Friday presented good trades, and I didn't take any trades Thursday or Friday because I was over 3 on the week going into Thursday and Friday, and I hesitated and I just wasn't ready to take the trade. So I'm going to go over the 5 trades I took. I took 1 trade Monday, 3 trades Tuesday, 1 trade Wednesday, and then nothing Thursday and Friday. Even though I was ready at the desk, I just didn't take the trades. So on Monday, I took 1 trade on MES. I lost about $55. This was a gap over and retest, the retest of last week's high. If you want to see it on the chart right here, this is the 1-minute chart right here, the 5-minute chart right here. So this 39.90 level was the previous week's high, and I was looking for a hold of that. If you want to see my recap right here, this is what I was looking for. I got in at 9:31. I got in 4 MES contracts at 39.89.5. risking down to 39.87, and I basically bottom ticked out at 39.87 before we eventually ripped all the way up to 40.50. We got to 40.50 around 11.15, but my plan, my trade thesis was really good. On the 5-minute chart, this looked a lot better. I know this looks a little choppy, but this entry right here at 39.90 with a tight stop loss is a really good trade setup, especially because we gapped over the prior week's price action and then continued higher on the hold. But I basically bottom ticked out and I wrote improper stop loss. So I was happy with that trade from Monday. I then took 3 trades on Tuesday. The first 2 trades I was fine and I was happy with. The last trade I thought was a stupid trade. So first trade I took was on Netflix 370 calls. And this is my notes for the day. I said good setup, that didn't play out. I got in 4 370 calls at 9:37. And I scaled out. So if you look on the daily chart, this is a little bit cleaner, but we had gotten over this 360 key level, and I was looking for a hold of 360. And right here at 9:37... right here at 9:36, it was looking like we were holding 360. I know this is a little bit of a premature entry, but on strength, you really don't want to wait, because if strength is going to continue, then you can see a nice move. So I got in 4 at $3, and I ended up stopping out of 2 here, stopped out of another for break even, and then stopped out of the last. So I was noticing that strength wasn't continuing over 361. I wanted to see a move over 361 and then get over 362, but that didn't happen. I exhibited good patience because I ended up stopping out of my last contract at 9:43, which is about 5 minutes later than when I got in. But the play just didn't work out, so I was fine that I took it. Now let me get into my next trade. This trade was on MES, and this was a intraday level hold, and it was a semi-intuitive setup. So I'm not the most happy with taking this setup, but I actually am pretty happy with this setup. I thought that it was a good risk to reward trade, and I thought that there was some merit to it. So if you want to pause the video and look at my notes from the trade, this is it. I got in 4. I went short 4 MES contracts. I was looking to short around 40.20, but I didn't know if we were going to get back up to this 40.20 spot. So I went short around 40.17, looking for us to continue down to low of day and then maybe continue through low of day. I was risking to about 40.20, maybe 40.21, so about 3-4 point stop loss, pretty tight. And the play ended up not working out. I ended up stopping out for break even. And then my last trade of the day on Tuesday was the trade that I really wasn't happy with. So when I'm trading pretty well and I get good entries, I can keep my stop loss pretty tight, and then I'm not risking too much, so even my losing trades are pretty small losers. So on this last trade, I got in 4 370 calls again. But I got in later, and I was looking, once that we had rejected off 361 3 different times, I was looking for a hold of VWAP around 359. And there's no real merit to this trade as to why I was looking for that particular spot or why I thought VWAP was going to hold, even though that these candles had broken below VWAP and then we continued higher. But I guess I was a little bit forcing an entry here. I thought that I had seen strength and that we were going to continue, but again, not a good setup. So I risked too much on this trade. I lost $85, and that brought me red about $115 for the day. So I really wasn't happy with that. Right here, I got in on the hold of 359 and ended up stopping out. You can see down here, this is my notes for the trade. Really not happy with this trade. About a 2-star trade. So my last trade of the week was probably the stupidest trade of the week that I had. And I think that it was a semi-decent setup, a semi-decent trade thesis going into the day. I thought I had a pretty good game plan, and what I was seeing was pretty on point. But I want to go down right here. This is an earnings gap down. My mistake was the size too big. Custom, the tape had me jumpy, and I had a bad entry. So on the daily chart right here, you can see that this 205 level as of late has been the support. So in the short term, if we get below 205, 205 is going to be a big spot. We might see a rejection off of 205 and then continue lower to maybe 200. So that's what I was looking for. I was also seeing in the pre-market after this gap down that 206 was a level. So if we got below 206, we might reject off 206, and then if we can continue down below 205, then this could be a really good entry for downside all the way to possibly 200. And post earnings, you never know how low this is going to go, so it could have gotten below 200. So 205 was the major level, but at 933 I went short. So if you see up here, we were weak off open, continued down, but held this 205 even though there was weakness and the tape seemed weak. We held 205, pushed back up, and right here on the test of 206, I got in, or once that I saw us test 206 at this 933 candle, we actually tested 206 and shot down really quick to 205. So that's what I mean, the tape had me jumpy, where once I saw that rejection from the level that I wanted to play, I thought, okay, we're going to see that rejection, get below 205, and then continue down because we had gapped down on earnings. The first opening candles are showing weakness, and then if we get that sharp rejection on the tape, that's an entry that I'm looking for. I really should have looked to have an entry at 206 and not in the low 205s, which caused a really bad entry on my option contracts. So I got in at $1.52, 5 contracts, and then we shot over 206 and 206.5 really quick. The tape had turned around like that, which is pretty common the first 5 minutes of open post earnings. And then I stopped out at $1.22, $1.20, and then the last contract was $1.08. So I lost about $180 on this trade. Way more risk than I was planning to incur. I should have been trading 4 contracts, and I should have been fighting to get a better entry fill instead of this really bad entry fill that I got. But that's just the way trades go sometimes. So I really wasn't happy with how I approached this trade. I should have waited for a break below 205 and then a test of 205 as resistance. That would have been a lot more confirmation. That 206 level was a short-term pre-market level, but the 205 spot was the major level in play. And we bounced off that. So this was even a decent trade to take to the upside. Those are my 5 trades from the week. I'm going to go over really quick 2 great setups that I saw on Friday. Alright, so pretty quickly I want to go over the Tesla playbook trade. This was a day 2 earnings trade. So in 2023, I've seen actually a couple good day 2 earnings trades. So what a day 2 play is the day after earnings are released, you might see mixed reactions. But if you get a direction, so Tesla clearly had gapped up, and then we were pretty choppy this day. We didn't see much movement but we were clearly still strong. So going into the day, I was looking for more upside, especially because we were gapping over the previous day's price action. So when we're gapping over the previous days or previous week's price action, I'm looking for a hold of the highs and then a retest for continuation to the upside or to the downside, depending on the direction that you're playing. So the previous day's high was 161.42. And on the 1 minute chart, in the pre-market, we're holding this 162 spot. So going into the day, I'm very keen on watching between 162 and this 161.5 area, with 161.42 being the previous day's high. So right off open, we push down and hold this 161.4 spot. And at 9:31, this is basically a picture-perfect entry. So if you get an entry here, I'm going to show a picture of the option contracts chart. But you can basically, now that we're holding VWAP once, hold VWAP again, hold VWAP again. This becomes a trade to hold because we're clearly seeing strength. We're continuing. The whole market is continuing. And this pushed all the way up to about 180. All right, the last playbook trade that I want to go over for the day is on Amazon. So Amazon was clearly flagging between this 90, probably 95 area and 99. And I was looking for us to get back over this huge $100 psychological level. And then we had a gap fill from 105 to about 110. So this had room to run over 100, and obviously when you finally break back over a big psychological level and you're seeing strength, this might continue. So going into Friday, the previous day's high on Thursday was 99.5. So here's the 1 minute chart of pre-market. This is the previous day's high. So we're not clearly showing strength here, but it's a pretty indecisive pre-market, trending a little bit to the upside and leading up to open. We're opening right around the pre-market high and actually over the previous day's high. So we're gapping over just slightly. So I want to see how we react to between this 99.3 and 99.5 area, and then I'll assess the price action and see where it goes from there. So right off open, this 930 candle rips over 100. So we ripped right over pre-market high, didn't even give us enough time to hold this spot or even get any entry below 100. I saw the tape and we were super quick to get over 100. So now that we're over 100 and clearly continuing to the upside, I'm going to be looking for a bounce on the 100 spot, huge psychological level, and then a continuation to the upside. So right here at 937, we finally get this push down and hold of 100. And I was watching this trade, had my finger on the buy, but just didn't take the trade. These 101 call, 0 days to expiration contracts were about like 35 cents. So with very small risk, you could have taken 10 to 15 contracts, risking maybe 10 cents a contract, maybe 15 max. Let's say you get in 10 contracts, you're risking 10 cents to maybe about 99.8. Your risk for the trade's about $100. You're in 10 contracts, and we see a push up to 101. You could take profits at 101. You could take profits at 102 at about 10:30. We're holding VWAP again on this touch again, so you could get another entry on these 101 calls. We continue all the way up to 102.5. So this was a super uneventful week. I wasn't ready and I wasn't in the right mindset to take trades Thursday and Friday, even though that's when the best trades set up. So that was just a byproduct of how I traded during the week and then letting that carry over into my mindset going into the end of the week, which I really can't let happen. I need to have a fresh and clear mindset every day so I can trade at my best. But that's just how this week went. I will put out my week 5 video pretty soon, and then I'll be all caught up, so I'm not going to be behind on my videos anymore. Hope you guys enjoyed, and I'll see you next week.